Big week this week in terms of the data coming out. Last week, we had a jobs report come out and more jobs were added and unemployment went down and everyone was excited saying, hey, this could be a change. This could be the start of something great. That is true. But I want to remind everybody, jobs are a lagging indicator in the economy. I'm not willing to say if we're in a recession or not. However, if you had a gun to my head and said, make a decision, which one is it? I would say we are. Why? 2 quarters in a row of negative GDP growth. I don't care what your political affiliation are. I do believe that recessions can be different for different economies. Look at China, for example. China is in a recession when it grows 2 or 3% a year. Why? Because they're such a fast-growing country that even if they're growing still, but at a much slower pace, that is a recessionary type feel. Recessions, to me, have more of a feel to them. Now, with that said, I'm a very quantitative guy. So in the future, when they announce whatever this recession is, it'll be announced in the future, and they typically are announced 8 to 12 months after they actually started. So, are we in one now?
Well, we're waiting.
I don't know. If you were to tell me, Paul, make a decision, I'd say yes. So you're probably watching this video. If you're new to the channel, you're looking for answers. I am Paul. I'm a value investor. My goal is not to try to predict the future. My goal is to make decisions based on things today that I see and look at them from a whole perspective. For example, with stocks, I'm not trying to predict when stocks will go down. What I'm trying to do is make decisions today on my stock buying to determine if my future looks better or not. You might sit there and say that's prediction. It's really not. It's making sound investment decisions based on what I understand in the long run. Now, a couple parameters here about this. One, the small business sentiment is coming out today. This video comes out today. The small business sentiment comes out today. Let's just look at what that means. So this is the small business sentiment index, okay? It basically talks to small business owners, how do they feel about the future? We were recently at 90. Now, we'll show you the consumer index next, but as you can tell right here, 09 was very, very bad. They were in the low 80s. But here's the interesting part. Look at COVID. That was the low of COVID. We're below the low of COVID for small business perception about the future. So that is a cause of concern for me because remember, small business is the #1 employer in this country. If they're worried about the future, what are they doing about hiring? Now, the good news is we have a very big backlog of jobs that are available versus people looking for jobs. So this can go down for a while. People can be laid off and still have people entering the workforce because of the big difference between jobs openings and number of people looking for jobs. It's the biggest in history. Number 2, the consumer sentiment index. Okay, so in July, it was at 51.5. So what does that mean? Well, consumer sentiment index measures, it surveys people and says, hey, how do you feel about spending? How do you feel about the economy going forward, et cetera? This is very, very bad. This is what concerns me, and here's why. 70% of the U.S. economy is consumer spending. This is the lowest. It's the second lowest it's been in history. The lowest was in June when it was 50. So it is up from June, but to show you how bad it is.
It's bad. It's real bad.
The average person listening to this video is 25 to 45, so you're in my age group. Ask your parents how the recession of 1980s, early 80s was. We had massive inflation, really high interest rates, and unemployment over 10%. These numbers are lower than they were back then. Not by much. The consumer sentiment index hit 51.7 at the low in the early 1980s. So we're barely below that, but that should be an indicator of how bad it is out there. So even though jobs last week was a good report, don't put too much in there. I'm hearing this term called boomflation now. I heard it for the first time today. But basically what it's saying is we're having inflation, but during boom times, because they're comparing it to stagflation, stagnant growth with high inflation, which we had in the early 80s. And then regular inflation, which is normal times, but regular inflation. Okay, so boomflation is being created now. I don't know who's creating it, but it's kind of an argument of saying, oh, things are fine. Look at jobs. Things are good. And yes, jobs look great. But here's an anecdote that happened this weekend from our CEO, Tim. Tim went to an open house with his wife. His wife likes to look at houses. He likes to look at houses. He stayed in the car. His wife went in. He thought it was going to be a very quick in and out. Long time later, finally she comes back out and she says, I had to stay here with these realtors. I was the only one that came in. Guys, when was the last time you heard that? Tim, how much was that house? $325. That's right in the wheelhouse of median home prices. It's not some obscene $2 million home here in Ohio. It is a $325,000 house. Now, in fairness, the realtors could have done a terrible job marketing. They could have been massively overpriced for the market, etc. But if there was really that big of a difference, if people wanted real estate that bad, even if it was overpriced, you still had people showing up saying, maybe I'm missing something. But the realtors told Tim's wife, nobody stopped by today. You're the only person that stopped by. That's very anecdotal. And I'm not trying to sit there and say it spreads across the entire market. But when you have interest rates doubling for people and you have this fear of recession and recession being talked about, of course, politicians are going to say, no, everything's fine. Now, they're also coming up with this anti-inflation bill, this inflation reduction bill. Guys, let me explain to you why we have inflation. Inflation occurs because of the devaluation of the dollar. When the government prints a lot of money and spends a lot of money, it devalues the dollar. That's what causes inflation. This entire inflation fighting bill is printing $700 billion of currency to be put into the economy. This is like O.J. Simpson starting a group for Wife Beaters Anonymous. This is absolutely insane. I can't understand why this is being accepted. It's just all pure marketing. And if you think out there that either side of the aisle wants this bill to not go through, you're absolutely out of your mind. This is what's crazy about what's going on right now.
Once again, you have judged correctly.
Then we had July, though. July was wonderful. We had a huge stock market boom. S&P was up 9.1%, or maybe it was the NASDAQ. One of them was up 9 or 10%. This was exciting. People say, finally, the bear market's over. Guys, spoiler alert. I do not believe the bear market is over. I believe this is a bear market bounce very quickly, just like if you look back to 2000. In 2000, the bull market went like this, and it goes like this, and it goes like this, and it goes down. We are in some sort of bounce because it was oversold for a little bit. People get back in. When I see people saying, I give up on stocks, and I don't mean just people being afraid, literally people saying, I give up completely. The one stock we always talk about is Apple. My good friend Michael Moskal always says, when I see people giving up on Apple, that's when I know we're somewhere close to the bottom, or if not, then we've actually hit the bottom. Apple is the go-to stock for, even look at Tesla. Tesla rebounded to the mid-9s again recently. It's the fanboys. You need people giving up on those companies before the bear market can really be over. That has not happened yet. We have valuations at insane highs. And if you believe the stock market's what caused that valuation to go up, the spending in the economy to go up, when it comes down, what's going to happen? I'm an average watch collector. I'm seeing a lot of watches come down in price. Why? Because crypto's down 50, 60, 70%. When that happens, all those crypto buyers out there who made money really easily, spending money on Rolexes and all these things, stop doing that. Prices come down. This is what I'm seeing in the economy. This is what I'm seeing in the stock market. We have a long way to go. Now, that doesn't mean it's going to be fearful for everybody. And I'm not trying to be a guy who's just putting me in fear. Remember, the most common question I get is, Paul, when's the housing crash? I don't think we're going to have a housing crash. If you look at 1975, 1985, interest rates went from 7% to 13 back to 9, finished at 9%. Housing prices almost tripled in that time period. We had a major recession with 10.5% unemployment. We had interest rates upwards of 15, 18%, and we still had home prices triple. Why? Inflation is what drives home prices the most. If we keep this inflation, or even some sort of inflation going, it can really curtail the decrease in demand for homes. That's fine, but I'm not sitting there predicting a home price crash. In 06, 07, we had blatant fraud. We had no lending standards whatsoever. Guys, I tried to get a mortgage for my house that I paid cash for. I was trying to get a refinance, and it took me 3 months. If that's happening, then I know the standards are a lot better now than it used to be. So if you like what you hear here, you like what I'm saying, please subscribe to our channel and watch this next video on how the upcoming recession could be the opportunity of a lifetime. Thank you very much for your time.